A new report is coming out today which will reveal the existing home sales from October, and a big economic indicator for the nation. But what does it look like here in the DMV? Sotheby's International Realtor Corey Burr back with us to talk a little shop. Corey, good to have you come back in again. Thanks for joining us. Typically, this is kind of a slower time of year historically, right?
Yes, most definitely. Our quietest time, 60 days of the year, are November 15th to January 15th. The holidays are on people's minds, and they just put real estate on the back burner.
So what do you think happens this year?
I think the same's going to happen. It's going to be quiet, and we're also facing these higher interest rates. When I was on last, I said we all had to hope for the lower consumer price index number for November, and that came in very benign, and that brought interest rates down 0.5% on mortgages. So we're getting a little bit of a bump on activity and more confidence about the future.
So if we historically take the 60-day period, once we get past that now, beginning of 2023, where do you think we'll see more activity, in the buying side or the selling side?
Well, it's...
Or at all?
We're going to see activity, and it's going to favor the buyers in the beginning parts of 2023. Even though they're going to have to pay a little bit more for their mortgages, they're going to be facing less competition, and prices are going to be more reasonable. So it's going to feel really good for buyers looking for property.
Historically, when you have changes like this, and we haven't seen this drastic of a change in the interest rates this quickly in a long time, but if you have something like this, it's a drastic change one way or the other. Does the market adjust immediately, or is it the kind of thing where, you know, months down the road or maybe months into next year, people start to say, well, 6-7% maybe isn't that bad. I've now become more adjusted to it.
So unlike the stock market and other markets, our market doesn't go that quickly. It's kind of like turning the Titanic. Maybe that's not the right
maybe
ship
not,
to use. But no, it's a more slow-moving come on with the interest rates. So it's going to take time for these rates to come back down. But the good news is that over 90% of the people have 30-year fixed mortgages right now. So I don't anticipate any kind of crash in our market, because a lot of sellers have good staying power, unlike what they had in 2008.
All right. As long as we don't hit the iceberg, we'll be fine.
Yeah.
And the reference totally plays out. You know, I saw this side-by-side that I was looking at when you talked about potentially siding and helping the buyers a little bit here. Just kind of showing how, you know, you will be paying more in your interest, right? But maybe you're not bidding as much for that property, so you could potentially find a balance somewhere. Is that how the market seems to be shaping out right now?
Exactly. Sellers are pricing their properties more reasonably, so that's to the benefit of buyers. Also, they're not having to use escalation clauses where they're having to bid above the asking price. Also, there's a feeling that even though these interest rates are high right now, most likely they're going to settle down at some point in the next 2 to 3 years, so that buyers now will have a chance to refinance and get that lower interest rate.
We talk a lot about buyers, but you're also in the business of selling, right? So the sellers, if somebody is in a situation where they had already planned to unload that home either this year or next year, what advice do you have? Is it the same thing, like just list it now and see what happens, or would you hold on to that property for a little bit longer?
Sellers need to get over trying to match what somebody down the street may have gotten. They need to understand that it's been a terrific market over the last 15 years, and that they made a lot of money. And if they have to be a little bit more reasonable in their sales price, so be it. They're still going to do very well on the sale.
All right. And your outlook, if you had to do one for 2023 in general, what does it look like?
So I'm watching a lot of the statistics that are the leading indicator of inflation, such as ocean shipping and used car prices, which are coming down drastically. So I think inflation is going to be more benign going into and going through 2023. That's going to put a lot of good vibes on getting lower interest rates for mortgages. And while our market is going to be very difficult to capture the momentum that we had during the pandemic, it's going to still be okay for buyers and sellers.
All right, we'll see what happens. I'm sure we'll talk with you again before then. Corey, thanks for joining us. Corey Burr from Sotheby's.